This segment brought to you by Kansas Farm Bureau, the voice of agriculture. To join today or for more information, go to kfb.org or find us on Facebook and Twitter.
Welcome to Farm Factor. Up first today, Dwayne Taves talks to Glynn Tonsor about the cattle and beef markets.
Dwayne Taves joining him once again here on Ag AM in Kansas, and an opportunity to catch up with Glynn Tonsor from Kansas State University in the Ag Econ department. Glynn, we think about the market for beef cattle from all segments of the cattle industry. Kind of at an interesting time right now, and fortunately we've been able to stay fairly current in terms of processing despite some things that we had happen this summer.
Very much so, and to kind of put a broad umbrella around my talk here today is I think we're done expanding the herd. I'm saying we're plateauing. There's not a real big incentive to shrink the herd nor expand it from here. We're projecting cattle prices for somebody that sells a calf here this fall, maybe $150, $155 for a 5.5 weight. That corresponds roughly with a break even. I mean, that implies, somebody that can run a cow for $880 to $900 cash cost. That is the number that corresponds with the break even. So we've set the stage to where I don't think we're going to expand the herd anymore. So that's the first part of this from a supply perspective. Keep going through the chain. We're sitting there at Stocker Field Day. I was talking about beefbasis.com is a resource I think our listeners will hear from in a different segment. You can project the margins for whether it's backgrounding or grazing systems, so forth. There's a lot of volatility in those projected margins right now, and part of that is because the CME feeder cattle futures market has moved a lot with some of those dynamics. Keep going. We get to the feed yard segment. There's a lot of red ink in the feedlot industry right now. Declining fed cattle prices, particularly relative to what we thought they were going to be a couple months ago, or certainly 6 months ago when cattle were placed on feed. So that's putting notable downward pressure on margins, and I'm projecting for the rest of 2019 that those negative margins will persist. There's a little bit of light at the end of the tunnel. Look out to April and May of 2020 closeouts. So more cattle that we're thinking about placing now or in the next couple months looks to be break even. And I was trying to share some bullish points in my talk where I think I could tell the story to where fed cattle prices might rally beyond that, because there's some positive demand stories. There's a lot of good things on the domestic demand front as well as the foreign demand front. But we also have a lot of macroeconomic uncertainty. We have negative interest rates around the world. People that are watching the stock market see a lot of volatility. There's a lot of debate in the Federal Reserve. You got a lot of that stuff going on, and it's important to kind of connect the dots with that economic uncertainty and beef demand. Beef demand is most sensitive to good economic conditions. It's the most expensive protein. So when we have a recession, it tends to be beef demand that takes the biggest hit in the general meat protein space. So I was trying to share that and say, A, we need to recognize the importance of demand and its role it's had the last couple of years, but also be cognizant that at some point we're going to have an economic pullback, and that is bearish for cattle prices.
Talk just a little bit about meat alternative protein sources. A lot of concern, a lot of optimism. It kind of depends on which side of the game you're on.
So the backdrop is there's lots of new products here and more in the pipeline coming. Some are plant-based, some are cell-based, and I use the term alternative proteins to kind of put a bow around it. And when I say that, I'm just referring to proteins that are quote-unquote new and don't originate from an animal. So traditional beef, traditional pork, those come from a live animal. That's quote-unquote traditional meat in some sense. These are alternative products. And yes, there's lots of questions and lots of consternation about their impact. There's a lot of unknowns about, what is going to be the future cost of offering them, exactly how price sensitive are consumers for them, and perhaps most importantly is which consumers are going to buy them, and are they ones that used to be traditional meat buyers that substitute out, or is it folks that weren't major traditional meat buyers? And at the extreme, to hold our listeners' hand, if it's vegan, vegetarians, and light meat consumers today that are the main consumers, then there's not much net substitution. If instead it's flexitarians that currently eat meat regularly but maybe not with every meal that substitute, then there's going to be a net substitution effect. So it's very important to monitor, and those are all the knowns I'm outlining. I also get questions about what this will do to trade. Most of these alternative products that are here today are positioned as substitutes for traditional ground beef, so hamburger patty substitutes and the like. And it's important to note that we traditionally import a lot of beef items for part of our ground beef production system. So one of the places we might see the first, let's call it market response, is altering our importing of beef as the meat protein quasi-ground beef space substitutes how we do that.
Our thanks to Glynn Tonsor, Kansas State University Ag Econ Department, joining us on Ag AM in Kansas. Jamie, we'll send it back to you.
Thanks, Dwayne. Folks, come back after these messages for this week's Kansas Soybean Update.